Just go ahead and put where you're from, where you're living, and what kind of trading you're doing, for how many years. So we are kind of a group. It's not just the guy on the mic and the other guys are very silent. You know, it's kind of boring on this side. Okay, so I'm gonna get started. Okay, start. This is the third session. Who hasn't been in the other session? Who is new to my sessions? We are discussing here trading systems, and we're giving the rules. So it's kind of a bridge between manual and automated trading. It's kind of the beginning. We still plan to come to London, hopefully end of June, beginning of July, to do a lecture, but it's not clear yet that we will be able to come over to London. So who hasn't been here? Because then I go faster. I don't need to repeat the beginning, and I go directly to the trading system. Please tell me who is new. Who hasn't been to my sessions yet? Please, just write it in the chat. Okay, some new person from, you can see the recordings. Yeah, but still, I would need to explain what a trading system consists of. So only 2 new people. Okay. Okay, so 3 new people. Okay, so I'm going to get started. The key point here is that a trading system has to have some characteristics for it to be a trading system. And the first one is it must be univocal. That means it has only one meaning. When I tell you a rule, it has one meaning that everybody understands the same way. Not like the word father that has basically at least 2 meanings, which one of the meanings is the father that has a kid, and the other meaning is the father, the priest of the church. So in trading systems, we have to have univocal rules that everybody understands fully the same way. It must be exactly replicable. That means that everybody trades on the same tick. Everything, the entry, the exit, the volume, it must be exactly the same. Once we have very univocal rules, they should become exactly replicable. And the third thing a trading system should have, it should have closed rules. It leaves no space to interpretation. If I tell you, when the trend is going up, it's not a closed trading rule, okay? Because everybody will consider a trend differently. So, but if I tell you, when the moving average of 19 periods, simple moving average, closes above the moving average of simple moving average of 62 periods, and the next candle, still the 19 period moving average is above the one of 62, then buy. Okay, that would be a clear rule which is replicable, and I would tell you buy 0.2 lots, then everybody would be doing the same at the very same moment. Okay, if we don't have that, we don't have a trading system. We may have a crystal ball, which is very bad for trading, or we may have a strategy, which is something in between a trading system and a crystal ball. And there are strategies which are more kind of crystal ball, and there are strategies which are more alike to a trading system. And the more alike we are to a trading system, the better. So for us, the trading system is very strict. Besides that, a trading system has to have 3 legs out of 6. Why 3? Because you wouldn't have a table that is not 3 legs, that doesn't have 3 legs, right? Okay, so at least 3 of them. But you don't need to have the first 3. You don't need to have leg number 2. You don't need to have leg number 3. You need 3 out of this 6, at least. If you have 6, it's going to be more robust. So you need that to have at least 1 of these entry rules, 3 of this, excuse me. Entry rules, exit rules, filters, position management, money management, and risk management. Okay, I go very quick. The entry rules are always composed of 2 parts. There's always, so to say, the core of the system, the setup, which gives us the right condition for trading in this kind of trading, in this style of trading, okay? It's not the same. There are 3 basic styles of trading, which are range trading, which is trading between 2 price levels. And generally in range trading, we sell on the upper part of the channel. We expect the channel to go back to the mean, to the average of the channel, and we buy on the lower part. This happens 70% of the time. The market is in ranges. They might be lateral ranges or slightly trending. This is also a range. If it goes slightly up, it's still a range. If the angle is not too high. Okay, trends happen only 20% of the time, and they happen when we have higher maximums or lower minimums. Okay, and if I would be more precise, we would need 2 more maximums and 2 more minimums to confirm. Okay, and breakouts. Breakouts happen 10% of the time. Okay, and that's the third basic style of trading. And within these 3 styles, we can more or less compose or understand all other types of subfamilies of trading. When we talk about reversals, reversal is a subfamily of trend systems. False breakouts, which we saw last week, it's a family of range trading. And we could even additionally add one more family, which is scalping, where we go for 10 pips or less as a target. But 12 pips would be also scalping, okay? Okay, the data, please don't put them here in public. Please, Brian, send them to the email at the end. Don't put them here in public, your personal data, okay? Please. Okay, so the entry rules must be composed always by 2 parts. We need always the logic of AND. That means we have a condition and another condition. That's the minimum, 2 conditions. And we can have 4 conditions, 5 conditions, 3 conditions. And the classical example is something on top of the chart and something below in form of an oscillator, or oscillator something that moves between 2 ranges of prices or numbers. Okay, the exit rule, the most basic exit rule that the trading system must have is a stop loss. If it doesn't have a stop loss by our definition in our trading methodology, we are very strict on that. It's not a trading system. If it doesn't have a stop loss, it's not a trading system. Okay? It might be something else, but it's not a system. That's very important to understand for many, many people, okay? I see this constantly. The other day I was lecturing in a broker. It was actually last Friday. Guy was trading. I was exactly explaining this. It was in an hotel, and he was trading in the first row in front of me. Big mistake. Exactly before the non-farm payroll, without stop losses, and I was exactly explaining this. And the trade was floating 500 euros against, and still people don't grasp it. You cannot trade without stop losses. Otherwise, it's not systematical trading. You can understand it, but if you don't apply it, it's not worth. There's no. It makes no sense. You come to my lectures, really. Okay, so stop losses can be dynamic or fixed, or there's a mistake here, or fixed. Okay, so what is a fixed stop loss? Basically, you go to a certain level of points that you admit as to lose and take profit. It can be also dynamic or fixed. Dynamic is based on a formula. It can be based on volatility or the last 2 lows in the last 30 candles or something of the sort. Fractals. Fractals are actually kind of a dynamic stop loss. But the stop loss is only once. If we start moving it, it's a trailing stop, and it's not part of the exit rules. It's part of the position management, and we will see that now. Okay, don't confuse a trailing stop with a stop loss. These are 2 different kind of animals. Okay, we can also exit a trading system by a reverse signal, oscillator levels, price levels, or by a timer. We will do this today on the scalping system. In order to understand this, I would suggest just watch my videos. They are in FX Street. We will also have our own channel in English. In YouTube, we are actually from Spain. Our channel is the most viewed, one of the most viewed trading school YouTube channels in Spanish, but whatever. We will have it in English. And if not, just watch the sessions. Adina, I'm sure, can put it up here, the last 2 sessions for the people, and you can watch them later on. Okay, the next thing is a filter. A filter is additional. You need to understand that the entry rules will always filter trades out or will always add more trades, okay? But a filter is additional. It's something you put on top of the system in order for you to improve the edge. What is the edge? Is the statistical advantage of the system. That means we have a statistic Of course, we will have losing trades, we will have losing streaks, but the overall, at the end, we will have a winning trading system because we have an edge. And the filter is very crucial to this, and we will use filters today as well as we did in the other days, okay? The fourth leg is the position management. There is basically three classical ways to handle the position management. Position management has to do when you're already in the trade. There is no way you can go out. I mean, you cannot erase the trade anymore. What you can do is you can re-enter the trade with another, let's say, for instance, you bought, you can buy again. Okay, or you can hedge, you can sell if you bought. That's also re-entering. You can make a partial close. You can exit. Let's say you bought a lot, which means 100,000 of whatever currencies on the left. Euro dollar, one lot is you are buying 100,000 euros, right? And you exit with 1/3, for example, 0.3, and this means you're closing 30,000 euros. That's a partial close. And a trailing stop is moving dynamically your stop loss, but that's part of position management. And you can combine all of these three. Basically, grid systems, martingale systems, all these kind of rare, risky things, which we could talk another a series of webinars actually about martingales. We could really talk about them. They work a lot with the position management. Okay, that's what they do. So trailing is not an exit role, it's position management. Then we have the fifth leg, money management. And in money management, what we decide is how much we should buy or sell and when. The timing is very important for money management. There's many approaches to it, you know, and one of my favorite approaches depends on how well is the trading system performing. I would consider how well is the trading system doing in order for it to buy, as I bought before, buy more or buy less, depending on the performance of itself, okay? That's a style of money management which works very, very well with robots, for example. And in our paid education, we give you 9 routines how to work around it, how to do a money management that depends basically on the trading system. But as of now, we will only analyze a fixed lot size because it's easier in order to value or validate a trading system. If the trading system is any worth, we will simply just put always the same lot size, for instance, 0.2 or 0.1 or whatever we need, not to go beyond normal risks, which we will talk in the next slide. So we'll use a fixed lot size. Okay, so it doesn't mean we will trade a fixed lot size. It's only for analysis purposes. Is that clear? Guys, stop me, especially the new ones. And the last leg, last and not least, is the risk management, which is a sub-part of the money management. And I consider it so important. I consider it's the crucial part of any trading style or system or method, which is not the same, a method and a system. Talk about it another time. That I separated. If you watch a car, you have generally one brake system, right? The brake pedal. Excuse me, one accelerator. You have only one accelerator unless it's a racing car, okay? But that's another story. Okay, I used to have a company in Miami when I was living in the States, and I bought a Mustang Mach-1. That's a quarter-mile car, and of course it had 3-4 types of accelerators, but that's not the usual, like with a revolution limiter, and when you went beyond a certain amount of revolutions, the car would be really speeding up, and you couldn't drive this in the normal road. But the usual cars, they have one accelerator pedal, right? And they have 3 brake systems. They have the pedal brake, they have the, I don't know how you call it in English, the reduction of the gear brake, you could call it, and the handle brake. So if in a car you have 3 brake systems and only one accelerator, that means that braking or stopping is more important because it's for your life, it's your security. So that's why we have to watch risk management separately from money management. And we have here 3 brakes as well. The first brake is the maximal drawdown. We will not accept a drawdown which is more than 23% of the initial balance of the account. We'll discuss this later on in other webinars, okay? We will not accept a losing streak which is higher than 15% of your initial balance. If you are losing 15% of your account in a single streak, it doesn't matter if it's in a week or in a day, something is very wrong, guys. So you better stop trading right there, at least for 1 or 2 weeks. And if you are losing more than 2% in your worst position, something is very wrong. And on average, we shouldn't be risking more than 1%. It's wrong what they tell us that the average should be 2%. You are too far already. And we will explain this in further lectures. Okay, so guys, yes, 23%. That's the maximum. Actually, the professionals, they sign a POA, a power of attorney with their investors that it should never be more than 30%. And I think 30% is already too far and beyond. It should be 23% for mathematical reasons, for the recovery of the drawdown. There's a formula. I don't want to get into it in this lecture, just in general. Okay. So if you understood there is 6 legs to a trading system, we go now to the today's trading system. Everything clear, guys? Shall I continue? Perfect. So today's trading system is a classical trading system. I'm going to just take 4 types of channels. First of all, Bollinger Bands, envelopes, Donchian channels, and Kellner channels. And I'm going to go into it, and I'm going to explain you why it's a scalping system. It's the classical Asian scalping system. Everybody heard about it. Most of you heard about Fab Turbo, or I don't know, EURUSD, or all this kind of EAs. They all trade the Asian session. Well, they're based on this strategy. They may do it with different nuances. They may not exactly use the Kellner channel the way I use it, but that's I would say that's the mother of all Asian scalpers, you know. And I will give you the rules. You can trade it manually, but you need to trade it in the night, unless you live in Asia, or you live in Latin America or in the States. Then you can trade it in the daytime. But people like us that live in Europe, you need to trade it in the night when New York closes and Sydney opens exactly, and you should close before the Tokyo opening. Okay, so basically we have these 4 channels to compare, and I don't know if you see the MetaTrader properly. And here you see the classical Bollinger Bands. Let me explain you briefly what is a Bollinger Band. The Bollinger Bands were developed by John Bollinger because it shouldn't be traded on too high volatility. These rules are perfect for the Asian market, and they are not okay for the European market. But if you want to break the rules, Wojki, you are really welcome to do that. You shouldn't, okay? It just trades in these hours. So basically the Bollinger Bands, what Bollinger did, he took a moving average here in the middle. You see that? And he took an upper band and a lower band. And what he wanted to know, what he wanted to calculate with this was basically, I don't know if you ever heard about the Gaussian distribution, statistical distribution. Some guys that study maths or in school, the Gaussian bell. Well, basically we could chart here IQ, right? The average would be 100. I don't know if you ever did an IQ test, but most of you guys, I'm sure you are above 110, otherwise you would be trading. And we have here the distribution, and we have here a point. This is called here, up to here, it's called 1 sigma, plus 1 sigma, minus 1 sigma. From plus 1 sigma to minus 1 sigma, we'll have 67% of the population. That means 1 standard deviation, it's calculated. And from plus 2 sigmas to minus 2 sigmas, we'll have 95% of the population. And basically, we find these types of distribution in nature. We find this distribution, for example, in a population of rabbits or something of the sort. And they work very well. But the problem is that in finances, they don't work well at all. Because the distributions are called long tail distributions. They are kind of this, like the blue chart. And thus, the idea of Bollinger was a neat idea, but it has a lot of problems because we will be many times distributed in a long tail, and we will have many more events in economics, black swans, there would be here the black swans, right? The negative events that they would be more frequent in economics and in finance than we believe it should be by statistics. And that's a bit the flaw of the Bollinger Bands, because John Bollinger said, okay, I just want the middle price and plus minus 2 sigmas, the distribution. And that's what the Bollinger Bands do. You know, if you go here, it's a moving average of 20 and 2 deviations, 2 times sigma. That means 95% of the price would be within these bands. So when it breaks above or below, it's only 5% of the times. That was the original idea of John Bollinger. And these bands work very well for other types of systems, for breakout systems, for example, but they wouldn't work so well for scalping. We will see now why. So that's actually the idea behind Bollinger Bands. The distribution, 2 sigmas, okay, you could put even 3 sigmas. If you put here 3 sigmas, then you will have 98% of the population, you see? Almost never the price goes out, only here. And if you put here 1 sigma, you would have 67% of the population within the bands, okay, and 33% out of the Bollinger Bands. It's just a statistical calculation, but the problem is when you have very high volatility and so on, it doesn't keep the rule of the distribution, because we have long tail distribution in finances, and that's one of the big problems in the finance world and in the trading world. The other type of bands I want to discuss are envelopes. Okay, guys, if this was not clear about Bollinger Bands, stop me, because it's kind of mathematical, and I like to explain things very fast. Was this clear? Where Bollinger Bands come from? Okay, 2 sigmas, distribution, Gaussian distribution. Okay, that's clear. Great. So everybody very smart here. Okay, we have envelopes. Envelopes is basically a channel which is a simple moving average, or whatever kind of moving average you can put here. And what you do is you would have the moving average here in the middle. You just put it up and put it down. You see, it's exactly the same channel. It's a mirror of each other, you see. The upper band, has the same shape exactly as the lower band. There's absolutely no difference between the bands. And this is called an envelopes. Well, there is more than Boyke's thing about why only in Asian session, but we'll discuss it once we come to the right channels. Okay, so what you can do with envelopes is you can decide to put it at a higher or at a lower deviation, you see. But the problem, if you are looking here for signals, what are we doing here? We are looking here for signals because we're building a range system, right? So we are looking here for signals that are below the channel to buy, and signals that are above the channel to buy. And later on, we will compare the 4 types of channels, and we'll find out that the best of them is the Kellner channel for scalping, okay? Envelopes are not bad, but for other types of trading. The third type of channel I want to discuss is the Donchian channel. The Donchian channel is a very interesting channel, and there are some interesting systems built on it. And the Donchian channel, which I had to download because I didn't find it in MetaTrader, you can get all these channels from me, no problem. And the templates later on, you just send us an email. You'll get the Donchian channel, the Kellner channel, and the template of the trading system. Later on, I will give you our email and we send it over to you, no problem. So in the Donchian channel, what we do is just we take the high or the low of the last 24 candles, right? So basically here you see we created a new high, and it stays for a while, 24 candles back, and the Donchian is just basically looking for the last 24 candles. What was the high? Okay. And it goes down. It works very well, for example, as a trailing stop. It's very useful as a trailing stop. And it's very similar to the King Yun of the Ichimoku, okay? But with a little twist. Okay, so you know, the Donchian channel is very good for other things, but it wouldn't give us very good signals in order to trade range systems, okay? So that you know of its existence, and you see it's very, very different, for example, to the envelope. If I go to the same moment in the market, how it would behave, you see, would be all three, they would be very, very different. And that's very important to know when you're building your systems. And the settings here was 25. It's just the maximum. It depends. You can have 25, whatever. This is 24, excuse me. It's just the maximum, right? Okay. Okay. And, or the minimum. And here, excuse me, where is it? I lost my thing. Here's the channel I will propose to you. It's called Calendar Channels. It's a very, very unique channel. I'm going to show you here, and I'm going to share with you guys here the definition in stock charts. I thought I would find a better definition in Investopedia, but this is a much better definition. What's very interesting about the calendar channel, well, it was created by a guy named Kellner, obviously. Okay, but what's very interesting is that we have a moving average in the middle, which is the common 10 period moving average in this case. It's explained here. What's very interesting that the other lines, the upper and the lower line, they are not based on price. They're based on volatility. Okay, and this is very, very interesting for trading. When we have low volatility, it would be very fine-tuned. You will see it now. And what it means basically that what we have here is an ATR, an average to range up and down of the last X candles, in this case 10 candles. This means that in the last 10 candles, the price moved on average 9.3 pips. Okay, so when we have in the past more volatility, the candle channel widens, okay? And here, when there is less volatility, the candle channel compresses. And this is very, very interesting for the style of trading we'll watch at now, exactly, which is scalping in this case. And out of the 4 channels, and we will make a visual comparison. And I'm going to go now to the Asian session. That means 23 p.m. Central European time, my time. It should be 22 p.m. London time. UK time, which is GMT plus 1, which is 21 GMT. That's generally 21 GMT is the closing of New York and the opening of Sydney. Auckland opened 1 hour before. And we see that the channel forms very clearly. Not every day. It's not very neat every day. Let's go for example, the day before. That's the Asian session. You see it here, right? The night. I have in this survey of this broker, at 11 is the American closing of New York. And you shouldn't trade exactly at 11 because we have rolls. That means that the banks make their closing, the daily closing, the spreads widen, and it's quite dramatic. You shouldn't be trading exactly at 23 p.m. You should be trading 1 to 5 minutes later. And you see here that a channel formed, and it only started moving at 2:25, which was Tokyo opened at 1 o'clock my time, Central European time, and it's a bit more volatile. But if you watch here and you compare Bollinger with Kellner is much more precise in widening and compressing the width of the channel than Bollinger. If you compare here, for instance, envelopes and Kellner, even if you put envelopes shorter, even if you would say, okay, let's put the deviation of the envelopes much tighter, you see that Kellner is much more precise in giving me signals. What we are looking here is signals out of the Kellner channel, you see? And here envelopes is not giving me so many signals. It's not so neat, okay? And Donchan, of course, wouldn't work at all. So the point here is we're going to use the Kellner channels, okay? Here we go. This is not a system for price action, boy. Okay. And this is the basis of the system. And I'm going to put the slide again. And we're going to go to the system itself. We should trade it on 5-minute candles. It could work on 1-minute candles, but 5-minute candles are the best. 15-minute candles are too slow, or they will give us too few signals. So the ideal here is a 5-minute candle thing. And the best pairs should be the pairs that are sleeping during the Asian session. The classical pairs are Euro Pound, Euro Swiss, dollar, American dollar against Canadian dollar, Euro Canadian, Pound Canadian. These are good pairs to trade on this system. What we need to watch at is first thing, you remember entry rules are always consisting of two parts. We need to break the calendar channel, you see, and here we have by the tick, okay? Whenever the price goes out of the calendar channel, we would sell in this case. And here, whenever the price goes out of the calendar channel on the lower part, we would buy. Remember, this is a scalping system. Okay, and we would need a confirmation. In this case, we will take a very reactive oscillator. It's called the Williams percentage oscillator. Larry Williams developed it. As you know, he won the competition, the same as his daughter. And it's a very reactive oscillator, very fast oscillator. It's based on a CCI, but it doesn't matter the formula. Just it's a Williams percentage. So for example, here, this is at 9 in the morning. It's the wrong hour, but it happened that the market was lateral. I'm going to just start with this hour, and then we'll go to the Asian session. Okay. So for example, here it broke, but you see below there is no confirmation bet because the Williams should be above this level of here minus 20 or whatever we optimized for selling, and it should be below here for buying. So here we have the Williams above the level, but the price didn't break above, so there is no signal. And here, for the first time, we have both conditions happening. Actually here, okay, and we would buy here. As soon as it goes below the calendar channel, we would execute here on market a buy. Okay, and we would have a stop loss. More or less, we have to put the stop loss at 20, 25. I will show you now in the slides. 25, 30 points. I'm going to paint it red. And it works best with a fixed TP, and it can be from 5 points to 9 points that we're taking here. So in this case, 9 points is very good. You see, we catch here 9 points in very little time, in 5 times 5. So in 25 minutes, we exit the trade. Okay, the euro dollar, it's dangerous. You know, I put euro dollar, you're right, it's a mistake. It can be volatile in the night. I wouldn't be trading it on the euro dollar now because it can be kind of risky. But you need to filter out the moments where it's too volatile. You know, it's very difficult lately, the euro dollar for scalping. But let's take actually a calm pair, euro pound. Or let's say calmer pair for this. You're right. Thanks for being attentive. Okay, so we have here the night, you see, and we can check here the trades. Here we have a signal. Okay. Here we have problems to exit this trade, and it's too narrow the channel, but whatever. I will give you additional exit rules. Yes, it should be not volatile, but for example, here in the euro pound, it's too little volatility. It's very difficult to make pips here. You see 3 pips is the maximum it makes all over the night from 12 to 1, and then it goes against, and you hit the stop loss. So you need additional exit rules. Yes. No, the risk return ratio is 1 to 4, 1 to 3, and we will have many times above 75, 80%, even 85% of winning trades. Okay. I mean, this has been robotized. This is trading all over the planet. It's called Fab Turbo. It's called yeah, you want a perfect setup. Okay. I had it on the euro dollar and it was a mistake. That's true. Let's look for a night which is a bit more moving here. You see that the candle widens. Maybe here. That's quite good here. Let's see here. Okay, so this is the first one. Yeah, that could be quite okay. 3 pips. Okay, you need to adjust it to every pair because you need to understand that we automate everything. So When I tell you let's finish with the rules first, and then we look for the setup, okay? But you need to understand that we are automating everything. So we adjust it to every pair. For instance, in the euro pound, you will have the stop loss much closer, 21 pips, for example, and you will go for less, for example, 4 pips, right? 4 to 21 or 5, something of the sort, 1 to 4. Okay, and in other pairs like the euro Canadian, which is much more volatile, or the pound Canadian, which is probably the most volatile of all those pairs here, you would have the stop loss at 30, 35, and you would go for the 9 pips, 10 pips, sometimes 11 pips. It depends on every pair. You need to adjust it to every pair, and this is part of the next slide of the system improvements. First improvement is that we filter the wrong hours, and let me tell you that there is another very good hour. I call it the Sushi Hour, and most people don't know that the Tokyo stock market closes for lunch, but that's true, yeah. They close for lunch, and it happens at 11 European time, 11 Central European time, which is, Tokyo time. And this corresponds more or less 3 o'clock in the morning, my time, in Europe, in Central Europe. And it's quite, the market, if you watch at this time, really calms down. And this hour is also tradable, okay? So I know it's very late in the night, okay? But you could find always that between 3 and 4, the market normally comes more down than after or before. And the Tokyo opening is the worst hour at from 1:15 to 1:45, because there can be some news regarding the Nikkei or some Japanese news, and I wouldn't be trading the dollar yen at this hour. You can also trade it. As a matter of fact, you can trade up to 10 pairs with this system, okay? And as I said, we robotize it. So we basically, we automate everything, and we optimize all the parameters. And you need to do this work, okay? M5, 5 minutes charts, absolutely, okay? Okay, what other exit rules we can use? What other improvements we can use? In some pairs, we can trade it earlier. You could trade, for example, if it's a calm day, you could trade, for example, the USD Canadian or the Euro Pound much earlier. You don't need to wait all the days. For example, you see it here, okay? This is the Euro Pound, okay? And you see, for example, that at 9, it's already a good setup to trade it, okay? The channel is a bit narrow, but you would make your 4 pips. That's the main thing, okay? And you could trade it, or hardly 4 pips, okay? On this little, you see here, for example, this is a signal. You see it? It's very little going out. I don't know if you see it, and the Williams confirms below, okay? You need to make the system yourself if you are going to trade it manually, because it's a scalper and it's very fast. Okay, you see what I mean? So you must be really ready to enter the trade immediately. It's not the same as with robots, because the robot will catch it immediately, and you must be very, very attentive. Here, for example, we don't have a signal. Almost, right? And here we have a signal, and we are lucky it goes in our favor, but we don't manage the 4 pips here. Okay, so because of that, exactly, because when it's too lateral, we don't manage our target, we have a timer. And a timer is basically a rule, an additional exit rule, okay, that tells you if you are already, I don't trade 2 pips spread. I don't know where you're trading, Boyki. I only trade brokers that are 1 or below, okay? If you're trading with a broker with 2 pips spread, you're in the wrong broker. Let's start with that. Yeah, that's a good actually command. You shouldn't trade this in a broker where you cannot scalp, okay? As a matter of fact, I pay 0.1 because I trade institutional, and I pay an additional external commission of 0.4. But which others brokers? Well, there's plenty of them. Admiral Markets, Swiss Code. There's many brokers that are around 1 pip. Okay. You can send me an email, and I can send you a list of brokers for scalping. Okay. But if you're paying 2 pips, it's too expensive for this system. This is true. At least for the Euro Pound. and it's a good comment, Boyki. If you're trading the euro pound and you're paying 2 pips, 2.5, don't trade it. Okay, unless you have the right broker for it. But if you're trading the euro Canadian, pound Canadian, there is no problem because you're going for larger targets. Okay. Of course, I've tested this system. I mean, we have automated it, and I've traded it. And I don't understand about the time span. The time filter, you mean? The timer? I don't understand your question, Carlos. Okay. So what is very, very important is that you, at the end, you must make the system yours. You need to optimize with the same parameters. It will depend from 6 months to a year. Yeah, that's correct. 6 months to a year. But it will continue trading maybe on the other pairs. Okay. So maybe it works very well on one pair, and after 6 months it doesn't work the same. Then you need to readjust. Okay. But it would be working on the other pair. That's the truth. It wouldn't be longer than a year, I would say. Okay, but it will. Asian scalping. It's something that has been coming in and out all over my trading life. Let's say I started in 2007. End of 2007, I started trading live, and I've been uninterruptedly trading, and it has been coming and going. Right? Scalpers get scalped. You can try things, Boyke, or you can believe things. I think if you believe everything you hear, here you have the rules. You should try them. You know, scalpers get scalped. Yeah, we can talk about market makers, brokers, and how bad is the broker, and how bad is everything, and how bad is the market. But in the end, it's about you making money, right? So you better get the right conditions to get the right broker, because in scalping you really need the right broker. We can even make a lecture on finding the right broker. I've been in more than 35 brokers. I know everybody in the industry. I know the CEOs of many, many brokers in person. As a matter of fact, I'm going to an expo in 1 week where everybody meets. Whomever is something in the Forex world will go to this expo. So the point is you need to have the right conditions. Okay, that's the main thing. Okay, so do whatever you guys want. If you wanted to do it price action wise, do it, but it's not my trading system. Okay, this is the trading system with these rules. The rules are very clear. You have a fixed stop loss, you have a fixed TP, you have very clear entry rules with 2 conditions, right? And you have 2 additional exit rules, which were a timer. If after a certain amount of candles that take profit is not reached, you exit on the middle bar, or with a certain amount of pips. Let's say, for example, you enter this trade here, okay, and you don't reach your target of 4 pips. Almost you reached it, but you didn't. Okay, so it's better you exit in the middle band after, let's say, 12 candles, which could be 1 hour or 2 hours, 24 candles. You put a timer, you exit here, and nothing happened. You lost the spread, okay? Low price brokers can be dangerous, the same as high spread price brokers can be dangerous. Okay, so it all depends what's behind, okay? What's the dealing desk? How they're doing the aggregation of prices. This is not the subject of today, okay? Really, it's a very long topic. You need to know what is a prime of prime broker, what is liquidity, how is it formed, how does the broker work in the back end. There's so much to it. You know, I mean, the easiest is just to believe that all brokers are bad and not to trade at all. Okay, but it doesn't help us. So we need to be constructive on this. We just need to find the right broker for scalping. The other systems I showed you the other day, they were going for very long targets. The breakout system went on average for 60, 70 pips. You wouldn't have a problem with the broker. In this trading system, there is simply brokers where you cannot trade it. If you have the euro pound, for example, I have the euro pound right now at 1 point. If you see here, right, 39 to 55, 1.6, right? And it will be in the night 1.8. Okay, then you shouldn't have a problem to trade it. You know, but maybe we should take another pair. Okay, so I don't understand the last question. Low price brokers can be dangerous. No, this we already commented. How Boyki? I don't understand, Tulani, what you're asking. Okay, so is this more or less clear? I'll put the slide of the rules again. Scalping is not for everybody. Okay, when you are scalping, you need to have a long ratio. That means that you are always risking. Whomever tells you I scalp 1-to-1, he's a liar, because normally in scalping you are starting with 1-to-3. You need to have the stop loss. This is the target, right, on the left, and you need to have the stop loss much further than the target. It wouldn't exist a scalping system of 1-to-1. And then these people answer, yeah, but I have visual stop losses. And the visual stop loss is bullshit. They don't exist. Either you have a stop loss or you don't have a stop loss. So normally you start with this kind of ratios, and you need to be above, in this case, 75% of winning trades. Or if you do the additional exit rules, you will manage a system of 1.25, 1.25. Okay. Yeah, it's very important because I hear a lot. I scalp with 10 systems, 10 pips stop loss. I've never seen it. Okay. Yes, you need a very high percentage win rate, but it does it. I mean, I've had it on this system up to 90%. You know, I don't know if I have something here, but all these Asian scalpers are based on this. If you take any robot that is trading the Asian session, it's based on a channel. I don't care if it's a calendar or whatever kind of channel, and it will trade. It will trade the breaking the level of the channel with a confirmation, and it will be always based on the same basic idea. Okay, and there is a lot of systems that do well. Yeah, I told you the other day, you don't trade a system alone. We trade all together. We're trading the scalper together with the other systems, and it will work pretty well, right? And it shouldn't be a problem. Okay, so the idea here is that on the average you have a better the percentage of winners must be quite good. This was actually a very old trading account of mine. It's a live account, and it's based on FAB Turbo and some manual trading based on this strategy. Okay. And I doubled the account in 1 month. The link is open, okay? And here's the ratio, you see? The trick is that we are not exiting on the stop loss. We are exiting earlier with the additional exit rules, you know? So we will have a 3-to-9, 1-to-3, more or less, or a bit better, and we'll be 67% in this case of winners. And in the end, you would have the earnings from this. It would be very tight, but it's doable. Okay, so this is a proof, right? And many of the trades were done with a robot with FAB Turbo, and some other trades were done on. I can put you here the link so you can watch it at home calmly, and the other were done manually with the trading system. Okay, so. It's not for everybody, I said it, okay, but it's another way of trading. It's a classical range system, which becomes a scalper, okay, and it's very fast, okay, so it's up to the taste of everybody to trade it or not. Okay, some more questions? Oh yeah, I'm trading it. Yeah. But we do only robots, Matthew. We do only robots. We trade it robotically, you know. We have bettered the strategy. I just gave you only the basic strategy. It has many more things, many more additional exit rules. We filter out, for example. We would say, okay, you break the calendar channel, and additionally, I would ask you maybe 1 or 2 pips above. You see? This would be 1 pip more, just to be more safe. Okay, it's the aggregate of all the trading system. Yes. Yeah, it can be very effective, Carlos. Just test it. I cannot do anything else. I gave you the rules. You must make it your own. Okay, guys. So if you want the template, you just need to write us with this data. Okay, name, last name, country of residence, Skype. cell phone and the years you are in trading, Olga very kindly will reply to you and send you the calendar channel, send you the indicators and the template. Our email is all about EAs. EAs are robots, as we said the other time, gmail.com. And we will be delivering our paid course as usually in English in Madrid, probably in July. And we are planning to come to London. Hopefully it will work out with a broker which has very low spreads, by the way. And it's not yet close agreement, but if we come, be certain we'll write you, and you can come to a 2-day free course, and we'll probably do it in an hotel or somewhere, and we'll inform you about it. But it will not be before end of June, beginning of July. Okay, so if you guys have the possibility to come to London, you're welcome to join us in person, and this would be great, actually. Okay. So yeah, having here your private conversation between Arvin and Carlos. Okay. Okay. Okay, guys. If you don't have any more questions, we need to surely but quickly close the session. Okay. We meet, I think, tomorrow. We will have the last trading system. It's gonna be a trend system. So we'll close the overview of systems. It was just a proposal. Of course, we trade many more systems. And remember that you should trade always scalping with trend systems. So they will combine well. You shouldn't be trading only scalping, only breakout. That's a big mistake. I said in the first session, you should be at least combining a portfolio of a breakout system, a range system, a scalper, and a trend system. So tomorrow we'll close the series of lectures. After that, I go to Rimini, to the big IT forum. It's the biggest trading expo in Italy. I'm going to be lecturing in Italian. If you guys are from there, you're welcome to come. And after that, I'm going to be at the expo in Cyprus. And probably in June, we'll reschedule new sessions with FX Street in English. And there will be more about robotics. Okay, general rules. We'll start from zero, from scratch. And I hope you will be joining us. It's not yet scheduled, but I'm quite sure that tomorrow's will not be the last webinar. I'm sure that we'll have many more webinars with FX Street in English. I think the response was quite good, and you guys were quite happy with our lectures. And you are more than welcome to watch the last sessions. And again, if you want the info, just send us the email to allaboutEAs@gmail.com. Other brokers, just send me an email. I will send you, tell me where you're from, where you live, and I can recommend you a list of brokers which would have, I don't know, AxiTrader. AxiTrader has very good spreads. They're from Australia. They're FCA regulated. Would be also very good, you know. So you need to trade brokers that are really acceptable. But whatever, I could recommend you any of those brokers. Just send me an email. Okay, guys. So that's it for now. And we meet tomorrow with the trend system. Thanks for coming.